Hello and welcome to The Trade. Before we get into the technicals, a quick look at what traders are watching. And Iran has accused the US of violating a ceasefire by striking targets near the Strait of Hormuz. The Revolutionary Guard saying they reserve the rights to retaliate, saying air defense units had downed a US drone and fired at a fighter jet, which they said had entered Iranian airspace over the Gulf region. US Secretary of State Marco Rubio has said peace negotiations remain on track, but it could take, quote, a few days to negotiate a deal. US consumer confidence fell in May as concerns about inflation linked to the war with Iran intensified. Meanwhile, the ECB board member Isabel Schnabel has said the central bank should raise interest rates in June, even if ongoing peace talks with Iran yield a deal, as the conflict has been far longer than projected and high energy prices are spilling into the broader economy. US government bond yields fell on hopes for a breakthrough. The 2-year at 4%, the 10-year 4.49%, Aussie 3-year government bond yields at 4.57%. And having a quick look at where currencies are tracking this morning, the Aussie at 71.8 ahead of the key CPI data. Well, for a look at the technicals, I spoke earlier to Violeta Todorova from Leverage Shares and began by asking her the outlook for Brent crude, in her opinion, amid this continued uncertainty in the Middle East.
Yes, after 2 months of consolidation, we started seeing some signs of the momentum cracking downwards. We have on the Brent chart the first lower high forming, which shows that the upside momentum is weakening. But what is the most interesting on the chart of Brent is actually that the relative strength index indicator has broken below its bull market range, suggesting that Brent is no longer in an uptrend. We are in a consolidation phase, and there is a good probability in the next 3 to 6 months to see lower prices. So the RSI is the leading indicator, which is giving us the heads up, but ultimately price will be the ultimate confirmation. So investors should be watching the key support at $87.31. Because as long as price remains above that level, we can see further consolidation. However, once that level of support gets broken, that will be indication that the rally which started at the end of February, it's pretty much over, and we can see in the next 6 months prices gradually and slowly declining to around $70, which will be a very good catalyst for equity markets.
All right, well, speaking of that, of course, our market very heavily leveraged to the energy sector, but we are just at the same level that we're at the start of 2026. Where do you see momentum, if any, for the ASX 200, Violeta?
Yes, the Australian market has been pretty much consolidating roughly between 8,485 points and 9,200 points for almost a year. And I think we will see prices remaining within that range. The relative strength index, it's firmly in neutral territory, suggesting that most probably we will not see lower prices from here, but neither giving us signs that a decisive break above 9,200 points is on the way. However, for investors, that still presents great opportunity given the width and the magnitude of the range. So every time the XJO retraces down near the support level, this presents buying opportunity. And although we are not right at support, we are at the bottom half of that range. So I think current prices are still quite attractive for Aussie investors. And I still believe by the end of 2026, we can try to break above the key resistance of 9,200 points, which can give us an upside target sometime in 2027 at around 9,500 points.
All right, you've got a few stocks on your radar that you think are ready to break out. Let's start with REA Group. What's that showing you?
REA is actually a very interesting stock. It has been trading in a downtrend for almost a year. However, I'm seeing the first signs of the downward momentum deteriorating. If you look at the chart, there is a very large bullish divergence between the price and the RSI indicator, which suggests that REA is most probably at an inflection point. So I'm keeping a very close eye on key support of $147.57. In my view, there is very strong probability that support will hold, and we will see the price rebounding to around $181. But I think by the end of the year, we have a very good probability of that level of resistance being cleared, giving us initial upside price target of 210 points. So I see the current price weakness providing excellent buying opportunity for investors. So for me, this is a very strong buy at the moment.
Is Catapult Sports one you're looking at as a potential buy as well? We spoke to the CEO, Will Lopes, last week, but year to date shares are down about 20%.
Yeah, Catapult is having a very similar setup to Rare Group. The stock has been pretty much in a severe downtrend for the last 4 months, declining significantly. However, we have a similar setup. A large bullish divergence between the price and the RSI is forming on the chart, and I think support of 286 is going to hold. So prices declining toward that level provides investors with a rare and very exciting opportunity to accumulate the stock. And I think the first upside target will be the price revisiting resistance at 399. But I believe that resistance will be broken upward sometime this year, giving us initial price target of 525, which is a medium-term price target, and potentially 560 target over the long term. So current price levels also appear very attractive to buy Catapult.
Finally, Violeta, Paladin, sort of taking it all the way back to what we're seeing with energy prices. What do you like about this stock?
Paladin also remains one of my favorite stocks at the moment, although the uptrend has moderated and Paladin has been trading in a wide range between roughly $10 and $14.44. The current price weakness and the proximity to key support, which is a multiple support level, once we have a previous support, which is likely to hold, but also that level coincides with the long-term uptrend line of Paladin, which gives us an indication that support is likely to hold. The RSI indicator remains constructive, firmly in the bullish range. So I think current price levels present good buying opportunity. On the upside, in the next 3 to 6 months, I expect Paladin to revisit its key resistance of 14.44, but that level, once uranium prices start recovering, which most probably we will see sometime in 2026, I'm expecting to see that resistance being cleared and giving us a price target of $17. So I think current prices also present great opportunity for Paladin.
Violeta Todorova from Leverage Shares. That does it for this edition of The Trade. Be sure to join us next time.